This is a Yahoo Finance All Market Summit Extra, Tax Time, sponsored by Straight Talk Wireless. New rules, new deadlines, and new ways to file your taxes. Over the next hour, we are breaking down all you need to know this tax season. We'll have some last-minute tips and great planning advice for next year. Along with our special guests, we'll tackle the top tax issues affecting individuals and small businesses. New IRS rules, strategies to lower your tax burden, overlooked deductions, crypto, tax-efficient investing, and a lot more. Join us now for this Yahoo Finance All Market Summit Extra, Tax Time. Hello, everyone, and welcome to our special for this tax season. I'm Akiko Fujita. Joining us now is Ken Corbin, the IRS's Wage and Investment Commissioner. He's also the agency's new Chief Tax Experience Officer. Ken, it's great to talk to you. I know it's a busy time of year for you, but you're coming up on 1 year in this new position, which basically was sort of created to improve the customer experience. 1 year in, what has that entailed for you specifically, and how much of that improvement are we seeing this tax season?
So hello, and yes, I'm really excited to be your taxpayer experience officer. And I think with the pandemic, it's really given us an opportunity to sit back and think about the journeys of the taxpayers as they interact with the IRS. It's given us an opportunity to be innovative, but also to kind of bring together cohesion around how we administer the taxes. A few of the things that I think that have come to light that we've made to help improve the experience for taxpayers is the introduction of things like new technology, like voice and chat bots on our phones and on irs.gov. It also gave us the opportunity to do something we call taxpayer experience days. And this is where our offices were open just this past Saturday, where taxpayers can come in and talk to us on the weekends, which was something that we found that taxpayers were interested in. For us, really, for me, taxpayer experience has been about improving choice and access for the taxpayers that we serve. So it's been an exciting year, and I'm really, really looking forward to the future.
Yeah, and no question that experience is going to be tested this tax season because of some of the numbers that we heard recently from IRS Commissioner Chuck Rettig. And I want to run through the numbers here. He said there are 2.7 million unprocessed individual tax returns from 2021, 2.3 million unprocessed from 2022. I know that's well over the numbers you're usually used to. What kind of delays is that likely to mean for the average taxpayer?
So for the average taxpayers, most of the returns have already been processed. We process almost 163 million individual returns every year. But we have to be sensitive that those taxpayers whose returns have not been processed, it's critical to them. There are refunds in those returns. There are other reasons that people need their returns processed, either for financial aid for college-age students, or maybe to obtain a loan. So what it means for those taxpayers is that their experience has been a challenging one. But at the IRS, we're all hands on deck. We have a plan so that we can get better than healthy by the time we get to the 2023 filing season.
I know, most people have filed their tax returns, those like me who've been procrastinating, still gathering all the paperwork. And your agency has made it very clear that it's important to get all the numbers in line because last year you saw what I believe is roughly 10 million returns with some errors in place. So if there are those who still haven't filed yet, what specifically are you recommending they keep in mind, especially as it relates to stimulus that came in through the pandemic, the child tax credit, these new provisions we're going to have to be thinking about?
Yes, so I've got a couple of tips here, more than a couple that I hope will help our viewers here today. Number one, file electronically and use direct deposit. There are lots of options out there, including our IRS Free File program. I also will say this, if you received advanced child tax credit or you got a stimulus payment last year, you should have received a letter from the IRS around January through February. Now, I know people might look at a letter from the IRS and say, hey, I may not want to open that, but open that letter. Having that information available that we're providing you, we're telling you what you received, will match our records. And so that'll make your filing experience better this filing season. The other tip I have for filers is to make sure you gather all your records, particularly if you received unemployment compensation. Some unemployment compensation is taxable this year, so be sure to include that when you file your return if you received it.
How do the numbers stack up when you compare it to last year in terms of the returns you've received so far and also what the refunds are looking like?
So the numbers stack up pretty comparably here this year. We did start the filing season about 2.5 weeks later last year, but so far, we've received about 91 million individual returns this year, and we've processed 89 million returns. What's great about that is we are seeing that more taxpayers are getting our message. And so we've seen about a 96% electronic filing rate, which is just outstanding. So thank you to everyone who electronically filed. We've issued about 63 million refunds, with the average refund being about $3,200 this year. And that average amount is up over last year.
And are you finding that people are, filing on their own? Are they turning to accountants? Have you seen a difference on that front?
We've seen a little bit of difference this year, but it's been only like a very slight difference. More taxpayers seem to be seeking help in filing their returns, whether they're going to a tax professional or even using our volunteer income tax assistance program, or VITA, where we offer free tax prep for taxpayers.
Let's talk about some of those improved technology, if that's the way to put it, that you kind of alluded to in the beginning, because we have heard the agency repeatedly say that you need additional funding to make this transition from what is an agency largely based on paperwork to more digital. I know you're rolling out your bots. That's sort of the first step here. How is that going to, number one, improve the experience, but improve the wait times for those who have been so frustrated with the fact that they haven't been able to get through the IRS?
So from a taxpayer experience perspective, there are a number of innovations that we're rolling out to help taxpayers ease that frustration, because again, it is about the experience. One of the things that we have rolled out this year and over the past year has been customer callback technology. And basically, that's where if you call our toll-free line and you're in queue and you're waiting for a live assister, you'll be provided the option for one of our customer service representatives to call you back. It is an industry practice standard to offer that technology. And our goal, when we get all of the money and financing together, is to provision 90% of all of our calls to be eligible for customer callback. Last year, we redesigned irs.gov to make it a little bit more user-friendly so taxpayers can navigate and find information, because a lot of information is available on irs.gov. We have an individual account for taxpayers that they can sign up and get personalized information about their tax status, which is very helpful. And we also have launched last year an account for tax professionals. So if you do go to a tax pro, they will be able to manage your account or affairs with the IRS online, which will reduce the need to call in. But we know we have to offer service to one and all. So we still offer walk-in, we still offer toll-free, we offer online.
Ken Corbin, I know you've got a busy few days ahead of you. We really do appreciate the time. He's Wage and Investment Commissioner at the IRS and also the new Chief Taxpayer Experience Officer. Thanks so much for your time today.
Thank you for having me.
Coming up next, how to tackle all the new rules and regulations around taxes this year and tips for planning ahead for next year. We're going to be joined by H&R Block Tax Institute Chief Tax Officer Kathy Pickering. She's going to be joining us on the other side. We'll be right back. Welcome back to this Yahoo Finance special presentation of Tax Time, sponsored by Straight Talk Wireless. Well, we are less than a week out from that deadline to file your taxes. If you haven't filed yet, though, you're certainly not alone. Roughly 30% of Americans, yes, 30% wait until the very last minute. And fortunately for us, we've got Kathy Pickering. She is the Chief Tax Officer at H&R Block. We've also got our very own Ronda Lee joining in on the conversation. Kathy, we've got a lot of questions to get through to, but let's start with this because we often hear that most people who wait until the last minute do so because they don't believe they're going to get a refund. What are you hearing in the calls that are coming in?
So right now, we know that about 68% of Americans are struggling with some aspect of their finances, whether it's, saving or spending, having enough money, filing taxes. And this time of year is just so stressful. What people, I think, also are thinking is because the last 2 years that we had extended filing deadlines, they're like not really sure when the deadline is. And so I want to be clear for everybody. Monday, April 18th, is the filing deadline. You need to file your taxes. Normally it'd be April 15th, but because of the way that holiday falls in DC, it rolls till Monday. And then of course, if you're in Maine and Massachusetts, you have until the 19th for their own very special holiday. But what's really important is it's time to file your taxes. And a lot of people are fearful of filing their taxes because they're afraid they're going to owe money or, they just don't know. And for that, we would also say it's really important to file an extension because you can get until October to file your taxes if you're really just not ready. But an extension to file is not an extension to pay. You still need to pay your taxes. And so the final thing I would say there is for people that are just really afraid of owing money, they just don't have the money, there are many options for paying that money, from setting up an online payment account to negotiating, an agreement with the IRS. You can always borrow money from friends and family. And something that people often don't know is that you can pay your taxes with a credit card. There's a convenience fee associated with that. But, if you're somebody who likes to get travel benefits or reward points, that may be, a little benefit for an otherwise difficult situation. So these are some things that are really important to understand at this time of year.
Hi, Kathy, it's Rhonda. I have a question for you. So for our taxpayers who they've already filed, and then they realize that, oh my goodness, I worked this from home, I forgot to get this credit or that credit. How long do they have to amend a filed tax return to make sure they get that extra money in their pockets?
The general rule of thumb is you have 3 years to amend your tax return. The only thing being, if you've got money that is owed to you, the longer you wait, the longer you're waiting for your money. But you reminded me of a really important point, which is for people who didn't file their tax return at all for 2018, you can still file a tax return up until this Monday. And so you may be asking, well, who doesn't file a tax return, or why wouldn't you file a tax return? And if your income is below the filing threshold, which is about, $12,000 for individuals, $25,000 for married couples, then you might just say, oh, I don't want that hassle of just having to file. But what that means is that you're missing out on money that's owed you. So if you had a job with some money withheld, maybe it was a part-time job or a temporary job, something like that, that money is due back to you. And the other thing we know from the last couple of years is that there's been some very important social programs, from the stimulus payments to the child tax credits that were expanded last year, where more people are due these social programs. And so it's a really important reason to either file if you haven't already filed, or if you filed your return and you didn't claim those benefits that you're eligible to, this is a great opportunity to amend your return for up to 3 more years to be able to claim those benefits.
Kathy, one other question. So for the people who haven't filed, can they still file electronically, or do they have to do in a paper return from like the people who didn't file in 2018 and they have a refund due? Can they electronically file? The people who didn't file in 2019 that have a refund due, can they still electronically file?
Sure. And so you were just hearing Ken Corbin talk about how important it is to electronically file. And I would echo that 100%. There's a couple little rules with filing amendments. Your original return needed to have been filed electronically. And if you filed your original return electronically, you can file your amendment electronically, which is absolutely the way to go. And so for your 2018 returns, those would be able to be filed electronically as well, if it was an original return.
Some good takeaways there, Kathy. A lot of people with questions over the next few days. Kathy Pickering, Chief Tax Officer at H&R Block. It's good to talk to you today.
Thank you.
Coming up on the other side, new tax rules for crypto investors this year. Everything you need to know ahead of next week's tax deadline. We'll be right back.
Welcome back to Tax Time, sponsored by Straight Talk Wireless. I'm Rachelle Akuffo. Now, we're fast approaching that IRS deadline, tax deadline, and many crypto investors are struggling to navigate the rules for digital currency holders. Well, here to break it all down with us is CoinTracker's Head of Tax Strategy, Shihan Chandrasekera. So first of all, Shihan, welcome to the show. Walk us through some of these new IRS crypto reporting rules and the changes that filers should be aware of.
Sure. Great to be here. Thanks for having me. So let me kind of give you a quick overview of what kind of guidance IRS has issued so far. So IRS first came into the picture in 2014, and they issued IRS guidance saying that cryptocurrency should be treated as property. So after 2014, they issued another set of guidance in 2019 in the form of FAQs. So since 2019, IRS hasn't issued any new guidance. In 2022 tax forms, we continue to see that infamous crypto tax questions on the front and center of the Form 1040. And that's a question that every taxpayer needs to answer going forward. So to answer your question, nothing new, but the guidance is there for you to file the actual tax forms if you deal with crypto.
There's a number of misconceptions here around crypto. And, we're sort of at that phase still where a lot of crypto investors are just trying to get to know what this all means come tax filing season. But the thinking often is that if you don't necessarily use crypto, trade crypto back to US dollars, you're not necessarily, you don't necessarily need to file. I mean, can you walk us through the specific events that crypto investors need to be aware of where taxes are owed?
Sure. So remember these 5 situations. And if you went through these 5 situations during 2021, you could have a taxable filing. So number 1, cashing out. Pretty self-explanatory. You had a Bitcoin that appreciated in value. You cash it out. You got to pay taxes. Number 2 is when you convert one coin to another. That also triggers a taxable event, even though you're not realizing any actual cash. And this is where a lot of people get it wrong. As a matter of fact, we recently conducted a survey in CoinTracker. We found out that 58% of the respondents didn't know that they had to pay taxes when you convert one coin to another, which is a very common transaction in this space. Number 3 is when you spend your cryptocurrency to buy a cup of coffee or like a Tesla or something like that, that triggers taxes. Number 4 is when you earn cryptocurrency. You can earn cryptocurrencies as a method of employment, like wages, staking income, interest income, those things are taxable. And finally, if you go to airdrops or hard forks, these are somewhat technical things that are unique to the crypto space. So airdrop is a situation where you have a certain type of wallet or a coin, and the protocol kind of gives you free coins. That triggers a taxable event. So those are the 5 situations. If you went through those 5 situations, you could have a taxable filing requirement.
And as we know, of course, crypto can be volatile. We've seen this year especially. How should filers manage things like capital losses and carryovers if they have lost?
Yeah, so as you guys know, the market goes through ups and downs all the time. We are pretty used to that nowadays. One thing to note is that whenever you have a loss, you should also file taxes on that situation, because you can claim up to $3,000 worth of capital loss in any given year. And if you have more than $3,000 worth of capital losses in any given year, you can carry those losses forward into future years. And in the future years, when you have capital gains, you can use those capital losses to offset those gains. So again, don't think that you had to file a tax return to pay taxes. You can also file a tax return to report your losses and potentially increase your refund, and also carry forward that losses into future years.
What about tax breaks? I'd imagine that's something that a lot of investors are curious about. What should they know on that front?
Great question. So the tax planning idea. So again, going back to what I was describing earlier, if you have any coins or NFTs that are below their cost basis. In other words, let's say you paid like $50,000 for Bitcoin, but now it's trading at $30,000, for example. What you can do is you can sell that coin and harvest that $20,000 worth of losses and get back into the same coin within a reasonable period of time. So when you do this, we call this tax loss harvesting. First, it's going to benefit you when it comes to taxes, because it's going to reduce your taxable income. And you can claim certain amount of those losses. And if you have amount of losses in excess of 3,000, that's going to go into future years. So tax loss harvesting is something that you should consider doing every month, every other week, depending on the frequency that you have. Another way to kind of save on your taxes is, if you really want to sell coins, make sure you sell the coins that you have held for more than 12 months. When you do that, you're going to get taxed on the more preferable long-term capital gain taxes versus you selling a coin after holding it for less than 12 months. So make sure you tax loss harvest. And second, if you really have to sell something, make sure you sell the coins that you have held for more than 12 months. And that's going to lead you to a less tax rate.
And as we've seen, different countries have different rules on crypto. So how should people navigate some of these crypto holdings that they have perhaps overseas that may have different tax rules?
Yeah, great question. I get this question all the time. The reality is that the US has this thing called a worldwide tax system. So if I have my crypto holdings in some exchange in, let's say, in Europe, I still have to pay taxes on those holdings if I have any disposition event under the US tax rules because I'm subject to US tax rules. So if you have any crypto exchanges in other countries, you don't necessarily have to follow those overseas tax rules. If you're a U.S. resident or a citizen, you still have to follow U.S. tax rules for those coins held in overseas exchanges.
And finally, you've already kind of walked us through the provisions that taxpayers should be aware of, but I'm just curious what kind of calls you're getting. What's the number one question you're getting from those who are having to file on their crypto holdings for the first time this year?
Yeah, I think the number one call that I'm getting is that, hey, Sean, like, how do I figure out my capital gains and capital losses? Because if you really think about it, if you're like a stock trader, at the end of the year, you get this nice Form 1099 from the brokerage, and your job is just put that numbers into the tax return and you're done. But in the crypto space, it doesn't happen. It becomes your responsibility to look at all the wallets and exchanges that you use, keep good records of all the coins and NFTs that you created, and figure out your taxable gains or losses by applying the latest IRS rules. And a lot of people find this virtually impossible to do, and they get afraid, and then they talk to us asking, hey, how do we go about it? I want to file my taxes, but I don't even know where to get my information. And that's where we help through CoinTracker.
And to that point then, for people who are perhaps either getting paid in crypto partially or fully, what is it that they need to present? And is that something that they would have to sort of go to the platform and get, or is this something some of these crypto platforms would naturally provide for them?
Yeah, so we see some of the athletes getting paid in crypto as well. If the employer were to do this correctly, your crypto wages should be included on your Form W-2. So as a taxpayer, I don't have anything new to do other than just inputting my W-2 into a tax software or just giving it to the CPA. But there are certain situations where your employer pays you in crypto directly, but they don't report that to you in any form of tax form like a W-2. In that case, you had to keep track of each coin that you receive, at what time you received it, and the market value each time you receive those coins, because every day, every second has a different value. So you need like these detailed records to kind of figure out your income to be reported on the tax form. And again, it's a very difficult task to do, but if you're getting paid in crypto, those are the records that you should keep on handy to file your taxes.
Certainly a lot to wade into, but we appreciate you making sense of all of this for us today. Shihan Chandrasekhara joining us from CoinTracker. He's head of tax strategy there. Coming up on the other side, we're talking tech and taxes. Up next, we're speaking with Intuit's Lance Williams about the next big thing in do-it-yourself tax software. We'll be right back. Welcome back to this Yahoo Finance special presentation of Tax Time, sponsored by Straight Talk Wireless. Well, the latest data from the IRS shows that more Americans are turning to accountants to prepare their taxes this year. But if you are looking to go it alone, there are plenty of resources out there. One of the most popular options is Intuit's TurboTax software. And to talk more about that, we've got Lance Williams. He's Senior Vice President of Product Management at Intuit. Lance, we're going to get into those products in just a bit, but I'm curious what you're seeing, because I was looking at the latest IRS data. It does show that people are turning to accountants, I'm imagining, because there are so many different provisions they're having to think about as a result of the pandemic. What kind of growth are you seeing on your front?
Yeah, thanks for that question. And TurboTax and TurboTax Live has a full spectrum of offerings, from DIY software to Ask a Pro for expert opinions along the way, or even handing your taxes off to a tax expert to completely do it for them. And we're seeing growth in DIY, and we're seeing massive growth in the TurboTax Live business, both with the Ask a Pro along the way and to hand off your taxes and have the expert do it for them. So I would say, we're seeing the same trends, and we see expert help is really a killer value prop for our customers, and they're seeking that from us through TurboTax Live more and more each year.
So Lance, Rachelle here. Just how much has artificial intelligence and machine learning really evolved since a lot of these do-it-yourself software programs came on the market versus now?
Really, the growth in artificial intelligence over the last several years has been amazing. Intuit, every facet of TurboTax has artificial intelligence infused in it. There's a discipline of artificial intelligence called knowledge engineering, and that is the baseline foundation for TurboTax's DIY software. And we also give a version of that knowledge engineering artificial intelligence to our experts, so they can help customers either by asking questions along the way with the TurboTax Live product, or through the TurboTax Live full service product, just doing the taxes completely for the customer. So there really is an infusion and a backbone all through TurboTax for artificial intelligence, especially with knowledge engineering, and also with machine learning targeted algorithms doing certain jobs along the way.
Well, what does that mean, though, bottom line, from a customer experience standpoint? I mean, I'm reading here that you've got 60 different machine learning models that you've deployed for this particular tax season. What are customers going to see on their end that makes a difference?
Yeah, what they'll see is if they make a mistake, if they don't have a form, or they forgot about a form, or if they made a data entry error, or if they maybe have a cost basis for one of their investments that's not quite right, we will flag that for the customer and help them fix it, either in the DIY software or have an expert walk them through how to fix that for themselves. So it really comes down to simplicity for the customer. It takes away any fear, uncertainty, and doubt that they have with the tax process, because we're always looking over their return in real time with our artificial intelligence and letting them know when things maybe should be double checked.
And so for people trying to gauge whether they should go the CPA route or rely on some of these tech products, what are the biggest distinctions that would help people really decide that?
Yeah, I think if you look at the spectrum that TurboTax offers, from TurboTax Do-It-Yourself, our flagship product, to TurboTax Live Do It With Me, which is this idea that as you go along the way, you can ask a tax expert for an opinion, and then full service. We find that full spectrum customers have more or less confidence in doing it themselves. So folks that are pretty confident in their ability to do their taxes, we give them DIY, we give them all this tech behind the scenes to help them. But what we find with our full service customers, which is our newest offering, just completely handing off your taxes to a tax expert, is customers want the best match. We have thousands of experts. We have an artificial intelligence machine learning algorithm that matches a customer with the best tax expert for them, depending on the profile of their income, investments, and deductions. So we know they're getting, and the customer knows they're getting the best expert for them. So that's one thing that really resonates with these assisted customers who are looking for a tax expert. And then along the way, we make sure that we make it really easy for that customer to hand off work and worry. there's the proverbial shoebox full of receipts, and we digitize those, and we take that work off of the customer's hands, and they can hand that off through photos or import and a variety of mechanisms to give that data to us digitally. And then thirdly, along the way, we have this idea of making sure that a customer knows exactly where they are in tax process along the way. One of the big pain points we've heard from our customers when they deal with a full service tax expert outside of TurboTax is they hand off their documents, they don't hear anything for a long time, and they start getting worried, will it be done on time? We have this technology, I kind of call it the pizza tracker. So all along the way, you know every step where your tax expert is and when is projected to get done. So we find those three things, the really great artificial intelligence match, the ability to use data import and photos to digitally hand off those documents to the expert, and then this idea of keeping a customer along the way, like those three things really resonate for our customers. And I think broadly, that's what we find customers who are looking for full service tax prep are looking for out of their expert.
Yeah, with that said, you know, go ahead, Rachelle.
Akiko. Well, I was going to say, with the tax deadline fast approaching, obviously a lot of times panic can set in. What are some of the last minute tech questions that you tend to get during this period?
Yeah, you know, we get a lot of questions about things like cost basis with investments, self-employed income, forms, data entry. And that's why we have our TurboTax Live experts there ready to help. So I would encourage folks to get started as soon as possible. We're coming up to April 18th very quickly. We have experts with TurboTax who can help you if you need it. And it's as simple as a chat or a phone call to talk with an expert. And you can get them on video, and they can help you out.
Well, a big thank you there to Lance Williams from Intuit. All right, well, straight ahead, we're joined by America's accountant, Dan Geltrude, about some of the most common tax questions that you might have right after this break. Welcome back to Tax Time, sponsored by Straight Talk Wireless. Yahoo Finance's Ronda Lee is back with us, along with Geltrude & Company founder Dan Geltrude. So Dan, I want to bring you in here. A lot of people are sort of looking at the clock, getting a little bit stressed out. Perhaps their finances, the receipts are a bit of a mess. What are the first steps people should take in sort of deciding whether or not to file an extension or to try and rush to the finish?
Well, you should never really rush through the process of having your tax return prepared because you want to make sure that your tax return is complete and accurate. The last thing that you want to have happen is you file your tax return in a rush, and then in 30 days or 45 days, you get a nice letter from the IRS saying, oh, there was a problem with your tax return. So you certainly don't want to rush through the process. However, if you know that you're going to be getting a refund, you certainly want to file that tax return as quickly as possible because you don't want the government holding your money. At the same time, if you know that you're going to have to pay with your tax return, well, then you truly wait to hit that button or put it in the mail until the last minute possible.
Hi, it's Rhonda. So I want to focus in on our people who they owe, and a large chunk of them wait until the last minute because, like you said, you don't want to hold on, give the government that money. For people who are not paying electronically and they're putting that check in the mail or they're thinking about paying by cash, what tips do you have for them? Like if they're going to do it by mail, it used to be people would run to the post office at 11:59. Is that a good idea? Or should they be sending those mail-in checks via, next day delivery?
Well, as long as the envelope is properly stamped by the due date, in this case, April 18th, sending your check through the mail at that last moment, and by the way, you should also do that by certified receipt to make sure that you can prove timely filing and timely payment. That's really the way to go. Of course, if you're electronically filing, you could have those funds wired directly from your account. So either way, that's preferred. Now, there are people who say, well, I would like to be able to pay by credit card, and certainly you can do that. However, when you are paying your tax bill by credit card, the IRS is actually going to hit you with a service fee. So why do that? They're taking enough of our tax dollars. I don't think that we have to add a service fee into that number in order to pay our tax bill. So I think regular mail on a timely basis by certified mail or electronic filing with the funds coming directly out is the way to go.
Dan, let's talk about a lot of provisions that people are thinking about now. What are we, second year, third year into the pandemic? Work from home was a big one. And I know a lot of Americans claimed deductions last year, whether it was their rent, the equipment they purchased in order to be able to work from home. What's changed?
Well, we actually have to go back to the tax law changes under the Trump administration. And during that time, most of the itemized deductions disappeared. And one of those related to having those home office deductions. Those disappeared. Now, what happened during the pandemic, and this was a question that I got all the time, well, I'm working from home and I am incurring various expenses related to being able to do my job. And that's the most important aspect here, to do my job from home. Well, if you are an employee, meaning that you are getting a W-2 for the work that you do, you are not entitled to take those home office deductions. So that was problematic and a surprise for people going back a couple years ago. It was more of a hurt when they said, well, now I'm working at home because of the pandemic. If you're going to be able to take those types of deductions, you actually need to be an independent contractor. In other words, having your own business. Now, when you do that, you are entitled to take all of those expenses related to your business activity as a deduction against your income, but you can't do it as an employee.
Now, as we stay with this topic of COVID, we saw a lot of generosity, a lot of people giving to a lot of good causes, GoFundMes to help perhaps people who were struggling, charities. But what do people need to know about what does and doesn't count as charitable giving as defined by the IRS?
Well, when you're talking about giving money to charity, that is supposed to be specifically for a charity recognized by the IRS. Sometimes you hear that 501c3 thrown out there. So yeah, that is recognized as a public charity for which, when you make a donation, you are able to get a tax benefit for. Now, what's happened over time, again, I go back to the changes made through the Trump administration. If you are not itemizing your deductions, for example, because the standard deduction was raised so high, people were not getting any benefit for making charitable donations. So what we have there is, if you are single, whether you itemize your deductions or not, you are able to deduct $300 of charitable giving, or if you're married filing jointly, you can take up to $600. So even if you're not itemizing your deductions, there are still some benefits to be had by making charitable donations to recognized charities.
And Dan, one more question here as we stay on the COVID theme, because I understand there's some changes with unemployment benefits between last year and this year. A lot of people still having to file on that as well. What should they be aware of?
Well, I think there's going to be a lot of people in for a surprise this year when they're filing their tax returns related to unemployment benefits that they received. Because if you go back to 2020, because of the pandemic, the federal government said, you know what, we are not going to be taxing unemployment benefits. Okay, great. But that expired going into 2021. So what happens is that there were people obviously still receiving unemployment benefits last year, and they didn't consider that it was going to be taxable. Therefore, they didn't make estimated tax payments or have the appropriate withholding. Now they go to file their tax return, let's say this week or into next week, and what do you know? I thought I was getting a refund, but now I have to pay because my unemployment benefits are now taxable. So that's one thing that people have to be aware of, that they could be in for a surprise.
All right, Dan, we're going to have to take a quick commercial break here, but I know you are sticking around. Much more with Dan Geltrude on the other side. We'll be right back. Sponsored by Straight Talk Wireless. We are back with Geltrude & Company founder Dan Geltrude. Dan, we've got, 6 days left to go until those taxes are due. What's the number one question you've been getting?
The number one question by far is, when am I getting my refund? Of course, anytime people know that they're getting a refund, they want that money as quickly as possible. So right now, the IRS has actually been pretty good this year, and for the most part, getting refunds has been taking place within about 21 days, about 3 weeks for those refunds to be issued. So that's really positive. But if you want to make sure that you're going to be getting your refund as quickly as possible, there are a few things that you can do. First, you should be filing your tax return electronically. That speeds up the process tremendously because it's basically instantaneously that you hit the button and your tax return is received by the IRS. The second thing is that you want to notate on your tax return that you want direct deposit, meaning that your refund is going to be deposited directly into your bank account. Now, doing those things will significantly speed up the amount of time to get your money. Emphasize that, your money. Now, to answer the question of where's my refund, there is actually a portal on the IRS's website, irs.gov, called Where's My Refund? So you can go into that 24 hours after your tax return has been received, and let's assume you file electronically. Now, the next day, the IRS is now tracking your refund and the process for which you can go on the portal and actually see where your money is.
So here's a question. You're filing your taxes and you thought you were getting a refund. You find out you owe, and it's much larger than you anticipated. You don't have the funds. Is an extension to file the same thing as an extension to pay? What do I do if I'm in this situation?
Well, there's two pieces to this question. First of all, let's talk about when the tax is due. So just because you don't have the funds to be able to pay what you owe with your tax return, and you say, oh, no problem, let me file an extension. The extension is only for filing the actual return. It doesn't apply to paying your taxes. So in other words, this year, your taxes are due April 18th. You could file an extension in order to actually send the return in, but you must make that tax payment. Now, the second part of this goes back to, okay, I didn't expect to owe this much. I don't have the funds to pay my taxes. What do I do? First thing, file the tax return anyway. Send the return in because you don't want to have a situation where you have a failure to file penalty along with interest. So send in the tax return. Also, whatever funds you do have to make a payment, do that as well. Now, you do have a couple of options. You could apply to go on an installment agreement, which is through Form 9465, and that will give you 72 months in order to make that payment for your taxes. Or you could also file for what's called an offer in compromise, which is basically to say, I don't have the money. This is what I have right now. So how about you accept this number, which is less than what you owe, as full payment? So those are what your options are if you don't have the funds to pay your taxes on April 18th.
And in terms of perhaps major life changes, say you got married last year and you're trying to decide whether it's better to file jointly or separately, how do you maximize your returns and avoid any marriage penalties?
Yeah, that marriage penalty, that really bothers a lot of people, which it should. I mean, I don't think people want to look at their marriage as a penalty, do they? But it can turn out that way with taxes. So what you really have to do, and this is where it comes into, you have to consider whether you want to have a professional actually prepare your tax return, is that you prepare your tax return and you input all of the numbers based upon which person earned and which person incurred the various deductions. And then when you're talking about, I know before you were talking about the technology and filing tax returns, so now you have the ability to actually switch back and forth to say, if I file jointly, what's the impact for my taxes? If I file separately, what's the impact on my taxes? And being able to compare the two is what will determine what's most beneficial in how you file your tax return.
We do want to thank you for your time this afternoon. Lots of great advice there. A big thank you to Dan Geltrude there. Well, from all of us here, thanks for watching. Do stay tuned for more Yahoo Finance Live coming up after this break.